You are listening to chartingwealth.com's daily review for Thursday, the 18th of October, 2018. Our book is for sale. At the end of today's daily review, you'll see a link to the book. You'll also see the way to purchase it in the show notes. We'll also have some great trainings for you at the end of the show today. We'll have one on the derivative oscillator. We'll have one on the price percent oscillator, and we'll have another one on trend lines and how important they are to you. Now let's jump into these charts. We see the S&P 500 and the NASDAQ 100 both up just a little bit for the day, but still big red down candles for the week. We see 20-year bonds, a little bit of a green candle, but down 0.59% for the day. And we see gold just almost breaking even actually for the day. It's down technically 0.01%, 0.1%, but we still have a green up candle for the week. Now remember, these are Heikin Ashi candlesticks. Let's jump into these charts and see what we see. We see the derivative oscillator gaining downward momentum for the week on the S&P 500. The price percent oscillator not going at the same strong angle it had been the prior week, but still heading down quite strongly. Remember, we had that weekly vertical crossover at the end of the week on October the 12th. Now, we go from the weekly chart to the two-day chart, and we see that latest two-day candle is a green spinning top. That means indecision, not as much as a doji, but indecision tending up, just pushing through the two-day trend line. This is a complete candle now. However, derivative oscillator continuing to gain downward momentum. That price percent oscillator, again, every time the candle has formed over the last three candles, it has broken some of the strong down move that it was under. But again, we still have a big separation between the red signal line and the price percent oscillator. And we go from the two-day chart to the 4-hour chart. What do we see? Well, of course, it crossed over going up in the morning, up a little more in the afternoon, and it did actually go higher than it did back on the afternoon of Tuesday. So again, still trending up, pushing through that two-day trend line, derivative oscillator gaining momentum, price percent oscillator heading up. Now again, do note up 0.01%. That is not a lot, particularly compared to what it was up yesterday. But we'll continue to pay attention and see just where things are going. Of course, you would have pulled out of your move with that crossover going up on the 4-hour chart. Wait for it to rotate back over. And if the two-day and the weekly are still in confirmed down moves, then of course you can jump back into the down trade. So we're going to go back now to the the weekly chart, and we're going to move on to QQQ, which is, of course, the NASDAQ 100. That is confirmed down move since that weekly vertical crossover back on the week ending September the 21st. And we had 2 weeks after that of sort of a sideways slide, and then that big crank over going down for the week ending the 12th of October. And so far this week, another down week, not as strong as it had been before, but that derivative oscillator is continuing to heat up. Price percent oscillator heading down, not as strongly as it had been. That two-day chart, we have an open box, a green open box candle, which again is a spinning top, and again, indecision, tending up. The price percent oscillator has gone about flat. Derivative oscillator also has pretty much gone flat on that two-day chart. Now again, remember, we still have a big separation between the red signal line and the price percent oscillator. We go to that 4-hour chart. What do we see there? Well, of course, it crossed over going up in the afternoon on Tuesday the 16th, up in the morning on Wednesday, and then down a little bit, pushing back through the two-day trend line. Derivative oscillator gained momentum. Price percent oscillator still heading up. So again, we'll wait for things to rotate over after this pullback, and then we can jump back in at the appropriate time going down. It's what we always want to do. We don't need to lose the profits that we have made. It's easy to pull the plug. And again, if you want to rely solely on those big charts, you can. And as we say over and over again, remember, the trend is your friend. But the last part of that most people don't ever pay attention to is until the end. And when it ends, it ends. And again, we don't want to be there holding the bag. Now, these are just starting to move as far as the Qs and the S&P 500. So again, hopefully we are suspecting, because of the long movements we typically get this time of year, because we're in the fall-winter trading zone, and because we've had weekly vertical crossovers, they typically go on for a while. So we expect them to roll back over and continue down. We'll wait and see. And again, we let the charts lead us. We're not forecasters, we're trend followers. Okay. And again, speaking of trend followings, 20-year bonds down 0.59% for the day. So far, we have a green up candle for the week. Derivative oscillator continuing to move down. Price percent oscillator moving down. The 2-day chart, again, still moving down a little bit on the price percent oscillator. Derivative oscillator continuing to lose energy. Really a sideways slide mostly is what we're seeing now on that 2-day chart. Tending up, but this latest doji is a red one, meaning lots and lots of indecision, tending down. Did push through on these last 2 candles, did push through the 2-day trend line, still below the weekly. So we'll continue to keep an eye on things. Remember, we still have a weekly and a 2-day headed down. What's the 4-hour chart showing us? Might be getting ready to cross over, going down again. If it does, derivative oscillators losing energy, price percent oscillator heading down. That will give you another opportunity to potentially jump into a down trade on TLT. And again, that's either practicing a put trade or an inverse fund. The only problem with 20-year bond inverse funds is the difference between the bid and the ask. It's not as liquid as we would like it to be. So again, practice it nonetheless. You can practice your entry point and your exit point, if nothing but that. Practice is what you need to do. Use our trade worksheet. It's available in the show notes everywhere, whether you're watching us on Facebook, YouTube, our website. You'll see in the show notes a link to the PDF of the trade, the daily market, and the weekly market worksheets. Fill those out all the time, every single time you can, particularly when you do the trades. So that's where we are on 20-year bonds. We'll go back to the weekly chart and finish up as we always do with gold. Gold about flat, technically down for the day 0.01%, but we have a big green up candle for the week. Derivative oscillator gaining momentum, price percent oscillator heading up. We go to the 2-day chart. What do we see there? We see it actually heading up, another green up candle, and big growth in the derivative oscillator. Price percent oscillator not going up at the same angle it had, but still heading up away from the red signal line. And as we look at our 4-hour chart, what is that showing us? Well, again, we had a jumping in point on gold, and we have seen it move up, but we are getting more and more concerned as the derivative oscillator is starting to head down, and the price percent oscillator is heading down. Derivative oscillator losing momentum, price percent oscillator cranking over a little bit. So again, keep your eye on the prize. If you've already taken your profit at a peak point, that is great and good for you. But again, you don't have to get out now, but just keep an eye on the charts and don't lose what you have gained. Just be careful with that. And again, we're still looking okay, particularly on that weekly chart, and the indicators on the 2-day chart are okay. But just keep your eye closely on the 4-hour chart. That's where we are as we end the day. Again, if you've not purchased our book, help us out. Buy the book. We think you'll like it. It helps explain to you even more in depth the things that we do here at the channel. And again, use those trade, daily market, and weekly market worksheets. They will supercharge your training. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.